Hello traders, how are you all doing? Where are you watching from? Let me know in the comment section. Shout it out in the comment section please. Anyways, in today's video, I'll be showing you how you can grow a small Forex account without breaking the bank. What you are about to watch cannot be found anywhere else, especially when I start explaining how the big banks trade using fundamental analysis. I will show you the exact strategy I used in turning a $229 account into $2,195 and how I was able to catch over 1,000 pips. For context, that is a 958% return on the trade, or you can call it a 1 to 9.5 risk to reward ratio trade. If the strategy is applied on a $500 account, the profit made would have been $4,790. Of course, on $1,000 account it would have been $9,500. On a $5,000 account, profit earned would have been about $47,000. On a $10,000 account, never mind. I believe you already get the point. Moving on, I used a strategy called the carrot and stick trading approach to flip the account. More on that later in the video. I will show you how you can be strategic in stacking multiple positions when adopting this type of strategy, how to manage the trades when they are running, and what to do if the trade starts going against you, which I call the cavalry sacrifice approach. I will be unpacking all of this in this video. Lest I forget, I will also show you the two important conditions your trade setup must fulfill if you want to catch this kind of swing movement. I will explain how the big banks and Wall Street fat cats interpret fundamentals, and if you stick around to the end of the video, I'll be revealing a secret when trading using fundamental analysis that I have noticed on the GBP that has made me catch big swing movements in the market. But before we get into any of this, I want to use this medium to thank all of you for subscribing to my YouTube channel. I was told it is very difficult to grow on YouTube, that it takes a newcomer YouTuber an average of 6 months and over 30 video uploads to hit their first 1K subscribers. But I uploaded my first video some 2 weeks ago, and guess what? We've officially crossed 1,000 subscribers with just 2 video uploads. Thank you so much, my Main Street people. Mi casa es tu casa. And as a show of appreciation, I have decided to do this Forex strategy breakdown video for growing small accounts. I will jump into the chart shortly, but I have a proposal for you guys. If you can get this channel to 10k subscribers, 10,000 subscribers, I am going to drop a free beginner to intermediate Forex mastery course, so that when I start explaining complex trading topics like the last key strategy, the snake and ladder pattern, the bearish former cartel pattern, the bullish twin mojo pattern, and a host of other trading concepts, then we would all be on the same page. As much as I would love to still faff and play around and not disturb myself with creating any free course, I know I would have to get busy creating the free course once we hit the 10k subscribers mark. So here is what you can do to achieve that. Subscribe to this YouTube channel if you are yet to subscribe, and smash that like button. That way YouTube will show more people this kind of content and they would also subscribe. Okay, that's enough talking. We have a strategy to learn. Let's cut right to the chase.
And you are now about to feel the strength of street knowledge.
Alright guys, this is the trade I took. Can you see? And I would explain everything. I will give you the thought process. But before I proceed, I have to give a massive shout out to my friend and my neighbor Moses. He gave me this idea. Okay, so that's a quick backstory to this trade, and the reason why I'm saying this is because I'm a very risk conscious trader. On my real account, I am always very conscious, but Moses saw my trading history and you could see that I was catching big swings in the market. I could catch 400 pips, 500 pips, But then I was making like $50, $100, $150 in some cases, depending on the risk to reward ratio on the trade, because I was only limiting my risk per trade at 2% of my equity. So, take it gentle. But Moses said, I'm wasting pips. Those were his words. He said, I'm just wasting pips, that I should take it to the next level. I said, how? He said, why not consider trading with prop firm? Before that time, I've never traded with any prop firm. So I asked him, prop firm, do you trust those guys? And he said, he trade with a couple of them, that I should try one out. Okay, I said, okay. You know what? Let's even check it out. So I signed up with this particular prop firm, Consumer Traders. By the way, I have no affiliate with them, but they were the one popping at that particular point in time. So I didn't go for the challenge account, the evaluation account. I didn't go for that. I went straight to their pro account, their Express Pro account. So I deposited $229 with them, and that is what you can see here to buy this account. And I will tell you what I don't like about these guys, about these consumer traders, later in the video. But let's get to the analysis. So I funded the account and I applied my trading strategy, which I call the carrot and stick trading approach. It's very simple. You cut off losing trades and you ride winners. That is basically the carrot and stick approach. Okay, and I will tell you the two important conditions that must be fulfilled before you try anything like this, before you stack multiple positions like this. And I will also show you how to do that. Although what I'm about to explain is a trade I took, but if you want to see me do it in real time, in live environment, if I can get 500 likes on this video, I'm going to drop that video. Well, I might not catch 1,000 pips. I caught 1,000 pips on the different trades I took here. I might not be able to catch 1,000 pips, but I would work towards maybe 500. I think I will be able to stretch myself to get those pips. That being said, let's look at the thought process. Okay, so the trade was GBP AUD. I took gold, I took GBP AUD, I took NZDJPY. But let me speak to the GBP AUD first. Two things that must be fulfilled. Number one, you must trade at an area of value. What is an area of value? Where you feel price is going to reject from if you are selling, or where you think price is going to go up from if you're buying. By the way, this is on the daily time frame. What I'm about to show you can't see it on the lower time frame, on the 1 minute, 5 minutes, 1 hour. I don't know why people trade on those time frames, but no trader makes real money trading on those time frames, and I can tell you that for free, except you are a high frequency trader, and I guess you are not. But moving on, let's see area of value support. Can you see price bouncing from this level? That is an area of value. Can you see it happening here? Area of value. Can you see price selling from this level? Sell, it came here, it went all the way down, touched there, it went all the way down, it touched there, it went all the way down, touched there, it went all the way down. Those are area of values. But the second condition that must be fulfilled, you won't see it in technical analysis, and that is an integral component of this type of trade if you want it to work out, which is you need volatility. You need something that would cause a huge price movement in the market. Technical analysis might not really give you that. You might just see a lot of consolidation. Can you see if you had bought here and you stack multiple positions like I did here, you'll be burnt because you'll be taken out of the trade, even though your analysis might end up being correct, but then you'll blow the account. And again, from these guys, the consumer trader guys, your maximum drawdown is $250 on this account, is 5% of your equity. Once your account goes below $4,750, it would automatically close the account for you. It's gone, poof, finished. Okay, so you want to be very strategic, and I will show you how to stack these multiple positions. So earlier I told you a strategy called the cavalry sacrifice approach. Okay, it's simple. So first, area of value, then volatility. Fundamental will give you the volatility. Interest rates especially would give you the highest volatility, and I would explain later in this video how increase in interest rates makes a country weaker, stronger. I'm going to explain later in this video, but just know for the purpose of this analysis that once there's an increase in interest rate, then the currency of that country would appreciate. I'll touch more on that. Okay, so let's play price. I've not done anything here. So at this point, see, most traders would be tempted to enter the sell trade here because they can see a resistance. That's for traders that are trading because of FOMO, fear of missing out. Pro like us, we don't do that. We wait for the real area of value, which is here, which I can see here. Okay, now see, boom, price touched my area of value. Can you see here? By the way, the catalyst, let me show you. 6th of June, let's go there. This 6th of June, Republic Bank of Australia released their interest rate decision. So economists thought they would retain it at 3.5. This is the forecast. This was the rate before this one was announced. The actual was announced. They thought they would retain it at that level, but I'm also an economist and I've checked all the economic indicators. I knew they were going to hike it. Okay, so that was why I entered my sell at this area of value. I didn't even wait for them to release it before I entered because I was already anticipating a rate hike. Okay, I checked so many in economic indicators for that purpose, and we can talk about that in some other video. Okay, so now if you are saying because a country hikes rates, the currency is going to get stronger, but remember this AUD is a quote currency here, meaning AUD is projected to appreciate because of the rate hike. Then you have to sell the GBP AUD because GBP is the base currency here. AUD is the quote currency. The quote currency will get stronger, the base currency will get weaker. So GBP AUD will get weaker. So now see the power of volatility. Let's see. Boom. This candlestick you see here, this huge sell-off was because of the news. They hiked rates, AUD got stronger, and the currency GBP AUD dipped. Now where do I take profit? At the nearest area of value, which is this support level. So as you can see, that was what I did. Let's play it forward. Boom, I already took out my position here. And by the way, let's check the pip movement here. How many pips was I able to catch here? I entered at this red line, okay, and I left here, which is 480 pips. Correct. So I exited most of my buy trades there, but now there are two ways of looking at these things. You don't just look at what is happening to one currency pair, you look at what is happening to the second currency pair. Let's go back to fundamentals. 22nd of June, it was time for Bank of England to take a decision on their interest rate policy, on their monetary policy rate. Okay, everybody knew they were going to hike rate because inflation was at an elevated level in England at that time at 8%, 10%. So we knew Bank of England was going to hike rate, and the economists were already saying that they are going to hike it by 25 basis points. 25 basis point means 0.25%. But on that day, see what Bank of England did. They hiked it by 50 basis points, which is 0.5%, from 4.5% to 5%. Now let me show you a powerful trick. Now, days before a major news event like an interest rate decision, you might start seeing something like this: price range. But I bought here again. Why? Because I knew Bank of England was going to hike rate, and remember I told you if you hike rate, the currency gets stronger, meaning GBP would get stronger. So if you start seeing accumulation, the point I'm trying to make, if you start seeing accumulation like this, price going sideways, it means investors are already stacking orders for the particular trade they want to enter. Okay, if you see this kind of accumulation, this range days before a policy decision, a rate hike decision or a rate decline decision, whatever, know that investors are already stacking their orders. This is an accumulation phase. But this was when the news was announced. They decided to hike rate. Now this is the trick about GBP. Once they hike rate, this was the day they hike rate, you might not see major movement on that day. It might take 1 day or 2 days before you start seeing the impact of the decision. Okay, now I entered here because I was already anticipating the rate hike, and now see I reversed my position from sell to buy. See, can you see? Buy. Now, I don't know if I explained, but cavalry sacrifice approach. If you want to enter any trade, for example, if you intend using one standard lot, don't use the full standard lot. Break it into tiny bits. So you can use 0.01, 0.02, 0.05 in 20 places, in 50 places. I don't know if you know about war, but if a general wants to go for a war, he sends a team in advance, an advanced team. I think it's called an infantry team. It's also called the cavalry team. Okay, so those one, they will check the enemy's territory, see what they are capable of. Some of them may get killed, but that's the sacrifice you have to pay for the greater cause. Okay, so that is exactly what happened here. That was why I had, you see, all these small losing trades I had, they were the cavalry team that were sacrificed. Because if you use one standard lot, right, and price moves against you a little bit, then you are going to enter the 5% drawdown and they will close that account. But you quickly exit some of those positions and ride the winners. You cut those losses and you ride the winners, basically. So here the increased rates, see the aggression now. It started getting stronger, but see it started the second day. See, boom, boom, boom. Where did I take my profit? At the nearest resistance level, because I'm buying. So I was able to catch how many pips here. I started stacking position here. I got that here. Another 400 pips, which is 800 pips. Now this is on the daily time frame. Okay, now see the power of that rate hike. See, can you see price just going up? Okay, it's retraced, but I was already out. I was out here. 800 pips. Now those were not the only trades I took during that period. I also took gold trade using my proprietary patterns. Get this channel to 10k subscribers if you want me to start revealing all of these things. So I caught 200 pips on gold. You can see gold trade 0.01. Just small lot size can do the magic for you. Okay, so let's go down. Then I took some GBP, CHF. You can see also I made some money, and you will lose some. You definitely lose some, but as long as your winners are more than your losers, you're good to go. Okay, so can you see, so that you don't think it's a demo account, this was the deposit into consummate traders. Withdrawal, can you see I withdrew 2,158. Can you see? And this was the total profit earned. Okay, now what I don't like about these guys, say you are going to split that profit. I don't like it, but I understand that they are in the business of making money. Okay, so I'll let it slide. But you get to keep 70% and they will take 30% of your profit. Okay, and as you can see, this is a profit withdrawal from MT5. I also bought another account. I made over $200 on some other trade using my own proprietary trading techniques. But because of the profit split, I was paid $197. And you can see they paid me my money. These guys, consummate traders, they paid me my money. Okay, and as you can see, I moved the money to my Binance wallet, my USDT wallet, and that was basically how everything played out. So volatility, even if you don't pick anything, if you want to stack multiple positions like this, you need volatility, one, and you need to trade at an area of value. Those two things must be checked. I hope you found value in this video. Please smash that like button so that more people can see this video. And like I said, I would explain how central banks increase rates and why the currency gets stronger. And if you want a more detailed video, I did a video on this particular topic on my channel. You can watch the full video, but let me quickly explain how the currency gets stronger because of rate hike for you. Watch. I promise to explain how interest rate decision moves the market. So here is the thing. Governments come up with what we call a monetary policy decision to combat inflation. I did a detailed video on how government intervene in the economy to maintain sanity in the society. You can watch the full video on my YouTube channel. I will leave the link in the description of this video. Back to what we are saying. Government will combat inflation by increasing interest rates. You may be wondering, how exactly does this affect the currency I'm trading? I will explain. Remember I said if a country hikes its interest rate, the currency of that country will be stronger. Remember I said that? The reason is because it will cost more for government to borrow money from the public. The government would have to pay higher interest on the money they are borrowing from the public. So investors and FPIs are the foreign portfolio investors. They are people with hot money looking for attractive yields where they can put their money and get the most value from their money. So what typically happens is that investors will liquidate their positions in the stock market or the equity market and would rather prefer to invest those funds with the government, because government securities are relatively stable and they offer a fixed rate of return. It's almost risk-free investing with the government, buying their securities, unlike you putting your money in the equity market or the stock market, where volatility and fluctuation in prices of an asset could ruin your account. So how exactly does this affect currency trading? You see, you need money to buy these securities, so there will be more demand for the currency of the country that increased the rate. And once the demand is higher on the country's currency, the value of the currency would appreciate. That's basically how it works. The more aggressive the rate hike, the stronger the currency would be. That's all I have for you in today's video. If you found value in the video, please give it a thumbs up. Also subscribe to the channel if you haven't already. Let's get this channel to our 10k target so I can drop the beginner to intermediate forex mastery course. Also join my free Telegram group and follow me on Instagram. Link will be in the description of this video. And if you are looking for a broker to use, register with my recommended broker. I will leave the link also in the description of this video. And on a final note, get my free ebook from www.wolstreetfinance.com. Link is also available in the description of this video. Till I come your way again, be good. Bye bye.